Hello everybody, welcome back to my channel, Trading Secrets. This channel is for entertainment purposes only, and for those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. And through this channel, I'd like to provide some stock analysis and a short trading lesson at the end, so please stay tuned. Okay, so in today's video, I'm going to be looking at the overall market. I'm going to be looking at what's happening, what are the reasons, what is the future, what are the best strategies. I'm going to be looking at a number of shares. And first of all, let's start by looking at what is happening right now in terms of the market. We are seeing lots of red, seeds of red in nearly all of the stocks, very, very significantly down. Some analysts are calling this continuation of the correction. I think I am going to go a little bit further and I'm going to say we now are in a crash. So I think certainly in terms of the shares that we are looking at, lots of them are quite significantly down, well in excess of 50%. So this, as far as I'm concerned, we are looking at a crash. Okay, so in terms of right now in the markets, what is causing this fall in prices is inflation. So let's have a look at a headline article here from the BBC News, and we can see here that US inflation has just seen the biggest jump since 2008. So this is very significant news in terms of the stock market. Inflation is always a very worrying factor. It does lead to a downward movement in the share prices. Markets don't like inflation, businesses don't like inflation. It does create uncertainty, it does lead to increases in prices, it does lead to increases in wage demands, it erodes the value of money, and generally it is a bad thing for business. Okay, so let's have a look at this significant rise. So the subheadline here is US inflation surged in April from a year earlier as the economic recovery picks up. So the first headline underneath there, consumer prices jumped 4.2% in the 12 months through to April, up from 2.6% in March, making it the biggest increase since September 2008. So that is actually a huge increase, going from 2.6% to 4.2%. It is almost a double. So it's huge factor. It is worrying for all businesses. So we're looking here in terms of why is inflation bad. So we look at further down, we can see obviously inflation measures the value of prices for goods and services, and the increase pushes up prices certainly for goods and services such as cars, food, materials. It also leads to an increase in wage demand from workers, and this also increases the cost for businesses as well. So prices of cars have increased in comparison with March. The cost of living is going up. And one of the reasons for this is also the general opening up of the economy. So this is the bad side of inflation. Okay, so let's just finish off here by looking at a chart here showing inflation changes from 2005 to 2021 for the US. So inflation sees the highest level since 2008. So very, very worrying. So we can see in 2008 it was just over 5%, almost touching 6%. And we can see right now, 2021, it's gone up quite significantly from below 2% to well in excess of 4% at 4.2%. So that's the worrying side. Okay, so what I'd like to look at now is the impact on shares since February 2021, right now to present May the 13th, 2021. So in terms of shares, I've chosen 11 random shares. I've highlighted these in blue color, orange and red, so I'll explain that shortly. But first of all, let's have a look at the general pattern. So most of these did reach all-time highs in February 2021. So let's have a look at what happened in February 2021. So ABML, American Battery Metals, at one point it reached a price of $4.03. What about today? It's trading at $1.47, so it's very, very significantly down. Alpine, 4. At one point it reached in February in excess of $8.51. I think it may have been close to touching $9 as well. Right now it's trading at $3.33, so huge fall there as well in terms of the percentage, well in excess of a 50% decline from the February high. Tesla, so we're not just looking at penny shares here, we're looking at established blue chip companies such as Tesla. February 2021, we can see a price here of $872 at one point in February. Right now, May the 13th, trading at $571. So very, very significantly down. Not quite down 50%, but probably between 25 and 30% down there. Mara, at one point in February, this did achieve $47, although that's not a high, but that's what it did reach in February, 47. So remember, this one actually generally follows the price of Bitcoin. We know right now Bitcoin is going through a decline for a number of reasons. And right now, currently trading May the 13th, $19.66. So again, a decline from that February price in excess of 50% down. NIO, we did see at one point in February, it reached $62 and also higher. Right now trading kind of almost 50% down, or in excess of 50, or close to 50% down at $31.22. So not many people could have predicted that or expected that. We have ChargePoint, which previously was known as Switchback Energy. At one point it was $41. Again, that's not an all-time high, but it was close to where it was trading in February. Right now it's trading at $20.21. So these companies here in the blue, these are companies that I still have fundamental belief in. I think long term they're going to recover. I think they are following the general pattern of the market. I'm going to look at reasons for that shortly. But let's look at some of the companies which I think, in my opinion, are probably not going to recover in terms of their all-time highs, in my opinion. So these two, first of all, QuantumScape. We know in February it achieved a price of $66. In December, however, that was also $131. So we can see very, very significant declines in QuantumScape. There was a huge bull run in the run up to December. Right now it's trading at $26.55. So a huge fall there in terms of QuantumScape. So in my personal opinion, I do not see this business recovering to that price of $131. Certainly within the next 2 to 3 years, I do not see that recovering to that price. So that's a business that I do think is overvalued. Certainly, you know, there is room for movement up from $26.55. However, if you're looking at this business achieving that all-time high of $131, certainly in my opinion, within the next 3 years, that's not going to happen. EHang, similar. At one point in February, this reached an all-time high of in excess of $124. There was a short report on this, and the business does have potential. The business is very ambitious. There is a possibility with, you know, significant breakthroughs that it could get back to that, but again, within the next 3-4 years, I do not see this price $21.40 going up to that all-time high of in excess of $124. Certainly, I think there's movement for EHang to go up maybe in excess of $30 within the next year, but to achieve that $124, that is, in my opinion, is very unrealistic. So the next three are stocks that I think we're having some tremendous bullish runs. They moved up very well. A lot of analysts were promoting them. I certainly invested in these three stocks as well. I'm no longer investing in any of these. These are the ones that I think high risk, and also I think in terms of the market, they've been hit very, very hard. First one, GAXY. At one point in February, it reached a high in excess of 7 cents. So this was at one point trading below 1 cent. So huge profits were made. I actually sold out on this at 3 cents. So that was still profit, but in hindsight, it would have been better to sell at 7 cents. It's currently trading at just over 1 cent. So in terms of the future, I think there is a lot of uncertainty. The business fundamentals are good, but it's a high risk penny stock. And I think in terms of the future, I think it's too much of a risk right now in terms of making an investment. UAVS, again, if we look at February price, this achieved a price in excess of $15. It was performing very well. A lot of analysts were promoting this. Certainly I also featured this on the channel, and lots of profit was made. You know, we invested at $10, sold at $15. and there was tremendous returns. However, you know, since the news article came out that there were false rumors with their potential deal with Amazon, the price has collapsed. On top of that, it's also been affected by the market as well. So right now trading on May the 13th at $4.06. So this is a company which I think is far inferior to ticker symbol ALPP. ALPP is not trading on the NASDAQ. UAVES is trading on the NASDAQ, but I see a lot more potential for Alpine going forward. So I don't see as much potential for UAVES. So that's, for me, is one that I will not be looking to invest in the short term. And the final one is probably the one I'm disappointed in the most, and that is DSGT. At one point in February, this reached a price of $1.08. There will be many investors still holding on to this. I did cash out on this, also at a loss, but I cashed out just over 42 cents on this one. In hindsight, when it reached in excess of $1.08, it did go higher than that as well. So that's not the all-time high. And I think the main reasons for this, the management of the company are poor. They've not done a good job on the marketing in terms of the promotion and the image of the company. They've not really emphasized that. So in terms of the business going fundamentals, there's a lot of uncertainty. It's not, handling itself very well. If there is a management restructure and if there is changes in their general approach to business, certainly I think there is potential for DSGT. However, right now it's not, in my opinion, it's not really worth any new investments right now. Okay, so next thing I'd like to do is just again use 9 of those shares that we looked at. We couldn't look at many other shares. It's similar. It's a similar pattern with many of the stocks and shares that we can see from February to May right now. So top left hand side, that's the share price for ABML. We can see again around about February it's reaching its peak, and since then a continued decline. The top middle one, that's ticker symbol ALPP. Similar thing with Alpine. We can see tremendous growth from a very low price. Huge profits have been made in this one as well. However, it's not completely collapsed. We can see there in terms of Alpine, but there is a little bit of consolidation. But in terms of February, still a significant decline. Top third one on right, that's the chart for Tesla. So for Tesla, we can see again a very good bullish run right up to January, February, maintained throughout February towards March as well. However, then since then a gradual decline, and I think it's now kind of at February it is kind of being affected similar to the others. However, not as much as a 50% fall from the February, but well in excess of 25% decline. And I do expect this one to recover long term. So I do have confidence in Tesla. However, it's still being affected by market conditions. So the middle one on the left hand side, this one is NIO. So NIO, very popular. Similar thing here with NIO. We can see that at one time it was trading well in excess of $60, $62, $66. This is a stock that I did sell out, cash out in excess of $60, and I've just invested in this NIO below $35. So this one I think has huge potential, but it is still being hit very hard there. We can see significant decline. Possibly it could go below $30 in current market conditions. The middle one in the middle column, that one is QS, QuantumScape. We could, that one, if you look at from the beginning, the run up there was huge. It was just, this was not stopping. Huge profits were made, but once it hit that price well in excess of $100, that would have been time to take profit. I do not see this achieving $100 again within the next 3 years. So again, similar pattern, but much more extreme. Middle one on the right, we can see there EHang, similar to QuantumScape, huge run up, and again a disappointing trend in the share price, currently going down. Again, as I said previously, hit by the short report. Bottom, we can see the share price there for UAVES. Again, that one is a disappointing one. and again similar pattern to the others, going down quite considerably. Bottom row, middle one, that one is DSGT, and again I think that one there is the one that I think I have lost a little bit of faith in that. And Mara, the one on the right, this one is the one that generally follows the price of Bitcoin, and right now Bitcoin is going through a few difficulties in terms of Elon Musk no longer accepting Bitcoin for buying a Tesla. So he has sort of stated reasons for this related to the environment, which is understandable. However, the short-term impact is Bitcoin is going down, and the stocks linked to that, such as Mara and Rai, are also being hit. Okay, so what I'd like to finish off by now is looking at what are the reasons for this current trend, what is the future, what are my personal opinions, and what are the best strategies. So let's start with the reasons. First of all, October 2020 to February 2021 was a tremendous bull run, especially in the EV sector, especially in clean energy, and also in a lot of the penny stocks as well. So generally one of the indications is when you have a sustained 3, 4, 5 months bull run, that is a strong indication that there's going to be a significant decline. So that's one of the things, and that does link in with number 2, where we have overvaluation. So a lot of the stocks did become overvalued. Certainly QuantumScape is one example of that, and then obviously we have the decline. So in February and March we did see the issue with the bond yields, and that was causing a lot of fear in terms of the stock market, and prices did start to go down, certainly in February, initially with the fear of the bond yields. Right now we can see inflation is the biggest factor. That's also driving down the markets quite significantly. And another one that I think I'd like to add on to there, which is relatively new, and that is diversion of investments into crypto. So I think a lot of people are investing into crypto, certainly with new cryptos such as trending cryptos such as Dogecoin. We have SafeMoon, Ethereum has been having a very good bull run. So a lot of diversion of investment into there, which will again lead to a decline in the value of stocks. So what is the future, and what are my personal opinions? So first of all, in my personal opinion, I think next month, June, we're going to see small green shoots of recovery. I think overall June, in my opinion, will be a green month. I think that will be the first green month. My main reasons for that, I think in Europe, we're going to see a little bit more sustained impact, positive impact of the vaccine. I think the impact of the corona will not be as significant as it is right now and it has been in the past. I think businesses are going to be starting to open up. I certainly think that is the case for Europe. I also think that's the case for the USA. Obviously, I'm aware that situation in India is a little bit temperamental and difficult there. However, in terms of the reports that I'm seeing, the mutant variation of India COVID is not resistant to vaccines as far as I'm aware. So certainly the vaccine makers are still saying it should be able to be controlled by the vaccine. However, that situation is very fluid. It could easily change, and nobody can predict the future. So it's only an opinion. Let's see what happens. And the other thing, my other opinion is stocks will reach the February 2021 high kind of early next year, but this is going to be for where the business fundamentals are strong. So certainly EV sector, the business fundamentals are generally strong there. Clean energy, the future is clean energy, and certainly I think that those stocks and shares will certainly go up. In terms of Bitcoin, I expect that to recover and also reach its all-time highs there. So these stocks in this area can certainly, in my opinion, reach the all-time highs that we just saw in February, but I'm looking at early next year. In terms of stocks that may not do that, is certainly some penny stocks. So the penny stocks are the ones more at risk of not recovering. Finally, what are the best strategies? So in my opinion, you need to continue to maintain having a diversified portfolio. You need to hold in terms of the stocks that you believe in, and certainly if you are able to hold, because you will not lose any money if you don't sell. So if you believe in the stocks, certainly I believe in ABML, I believe in Alpine, I believe in Tesla, and believe in the clean energy stocks such as GEVO. So best strategy there, in my opinion, is to hold any new investments that you use. Certainly if it's a risky penny stock, it's very, very important to use a stop loss, and also consider dividing your investment into 3 sections. So don't put in a huge amount straight away. So time it over 3 days, time it over 2 days, time it over 3 different time periods. So if it goes down significantly, you can average down. Okay, thank you very much for watching. I hope that helped, and please stay tuned.